Hey, I'm Adam Jusko from ProudMoney.com. In this video, I'm talking about the new JPMorgan Chase You Invest free stock trading app. It could be a Robinhood killer and maybe even a killer of some of the other discount brokerages out there. But before we talk about it, I would ask you to please subscribe to our YouTube channel if you have not already, and if you have already, I thank you for doing so. So I saw it first this morning on CNBC, and I've seen it on some other news outlets as well. Chase is about to, or JPMorgan Chase, I think they're going to be using the JPMorgan more than the Chase here. They're about to roll out a new app called You Invest, which will essentially allow you to trade stocks for free. Now, that news was met with some unhappiness from people that were owners of things like E-Trade and Schwab. If you own their stock, having JPMorgan Chase jump in here not only as a discount broker, but as completely free stock trading is something that is not going to make you very happy. If you're Robinhood, even though you're offering free stock trading and have been for a while, having Chase jump in here is, maybe not the best thing for your business otherwise either. So for all of these companies, this is kind of a big deal. Now, specifically, the new You Invest app is going to give you free 100 trades in the first year of you having an account. After that first year, you will also get 100 free trades for the year, provided you keep at least $15,000 in your account. If you don't meet those specifications, over 100 trades, or if you don't have enough money in those years after the first year, it will be $295 as a commission on every trade that you make. So this is no doubt appealing to people that maybe are already using E-Trade or Schwab. Even if you're trading over those 100 or you don't have the high enough balance, you're still only looking at a $295 commission on trades, and for the most part, you're looking at free trades. I would think that most people, who might switch already have a $15,000 balance, and maybe even, a decent number of the Robinhood people have that kind of balance too. So this could be something that is very, appealing to many people sort of across the spectrum. Now, Robinhood is already supposedly sitting with 3 or 4 million customers, so it will be interesting to find out if those customers stay with them or if they are interested in the, the Chase or JPMorgan Chase product here. From what I know of Robinhood, I have not actually used it myself, but I hear rumblings sometimes that it crashes during, during trading hours, and people have found, so there are some disgruntled people. How big that percentage is, I'm not quite sure, and whether having, a company like JPMorgan Chase that, sort of has the brand and would give you the feeling that, you're not going to have those kind of issues. There's the potential that they can pull away some of those Robinhood customers. And of course, there is the potential that because they are now sort of the big, 500-pound gorilla or whatever you want to call it here in that space, it could hurt Robinhood in terms of, acquiring new customers going forward, because Chase obviously is going to, get a lot of publicity for this, and they've got the name behind them that probably makes a lot more people feel secure, where Robinhood is really not very well known unless you are somebody that, is comfortable doing, doing this stuff via mobile and all that kind of stuff. So a lot of investors might not want that experience, and having the Chase name will make them feel a little bit better. So anyway, all of that said, the one thing that is sort of bothersome to me, or that I think is, maybe a downside to these free trading options, and this isn't specific to JPMorgan Chase or Robinhood or whatever, but the ability to have free trades, while free is better than having to pay, the ability to have free trades sort of encourages you to trade more often. And what we know from investing is that for most people, the more often you trade, the worse you do. So your returns are actually worse when you trade more often, than when you don't. So for some people, they are going to be encouraged to trade. They're even going to be encouraged to day trade because it's so easy to go in and out of these stocks or ETFs or whatever, that you are going to have people getting worse returns. They're going to have more taxable events because they're going to be, doing short-term trading versus long-term investing. And that's not necessarily a great thing. And now, while free is better than having to, pay, it is also, sort of I don't want to say a safeguard, but there's a little bit of a roadblock there in terms of you making a trade. If you have a commission, it's going to give you pause before you make your trade, because you're going to have to pay that commission as well. When you don't have any kind of commission to pay, it's much easier to, hit that buy button or sell button and, continually move in and out of the stocks that you have. And for a lot of people, that's going to mean a worse performance. Now, for, some people, if you are in the, I don't know, you're in the financial place that you can do so, no big deal. Maybe you have a whole diversified portfolio and this is just a small piece of your overall portfolio where you like to play. And so having free stock trading is just a way for you to sort of gamble a little bit with a little bit of your portfolio. But for a lot of people who are getting into investing for the first time, this is actually kind of dangerous, because what you're getting is you're getting marketed, the idea of trading for free and investing your money and doing these trades, when really sort of the, solid personal finance advice would be that if you have money to invest, it should, number one, be going into retirement accounts like 401ks or IRAs that give you tax benefits for saving that money and for long-term investing. And it also, encourages you again to trade more often, which means you're going to be moving in and out of different things. You're probably going to have a very much less diversified portfolio, which means your returns are going to go up and down a lot, which for a lot of people who are new to investing, new to trading, they're not used to. And then when they get, when they have losses, they pull all their money out. So there's a lot to worry about sort of with the idea of free trading. And a lot of these apps, again, are from, younger people that are investing for the first time. So if that is you, while free trading is good, I would encourage you to, look overall at what your portfolio should be and invest in your retirement vehicles. And, if you were going to buy individual stocks, make that a smaller part of a bigger portfolio so that you remain diversified and you don't lose all your money in one big chunk. Because even though your trade might be free, if you lose all your money, that free trade isn't going to be a whole lot of consolation to you. So anyway, thanks for watching. Please go to ProudMoney.com, where we have other personal finance articles, and we do credit card reviews and all sorts of other fun stuff too. Thanks for watching. Bye.